afternoon once again to every one of us here, and I want you to be here, especially will I call it the ExCos, the executives, and the chairperson. I would like to appreciate you sincerely for this opportunity to make this presentation this afternoon. And can you take me to the next slide? My name is Dr. Angela Nnamani, and I'll be taking you on Understanding Nigerian Tax Administration Act, Key Highlights and Compliance Expectations. Can you hear me?
Yes, we can hear you, ma'am.
Okay. So I'll be taking you on the topic, Understanding Nigerian Tax Administration Act, Key Highlights and Compliance Expectations. And before I continue with this session this afternoon, Yes, before I continue with the session, before I continue with the session, I would like to just give a disclaimer, kind of. The presentation I'm making this afternoon is only for tax education and general awareness purpose. And the information provided is intended to help participants to understand key tax concepts and should not be misinterpreted as legal or financial or professional advice. So while every effort has been made to ensure accuracy, tax laws and regulations is changing, is dynamic, and we are expecting a lot of guidelines and circulars to also guide us from the authority. So participants are encouraged to consult qualified tax professionals where necessary to guide them with respect to individual situations. So let's quickly go on to the business of today. So on the course of this presentation, I'll be taking us through, our outline will be presentation objectives, then we do an introduction, we look at the overview of the Nigerian tax reforms, then we see the key changes that we have with respect to the Nigerian Tax Administration Act, then we look at the compliance expectations, and we conclude. So the presentation objective is, as we can see, can you take us to the next slide, please? Yeah, at the end of this session, the participants should be able to gain a clear understanding of Nigerian tax reform, understand the overview of the Nigerian Tax Administration Acts, and grasp the compliance expectations from taxpayers and tax consultants. So, by way of introduction, I would like to give a context, and you will agree with me that for every countries of the world, every country of the world in the world today, there's no country that does not need revenue. And looking at the various sources of revenue available to the government all over the world, it is only taxation that is the sustainable source of revenue available to governments all over the world. Why do we even say it's sustainable? We can actually leverage on tax revenue to plan for the economy. Unlike other sources of revenue, like even oil revenue, we see the changes, the fluctuation here and there in the markets. So we can't actually say that they are sustainable. It's only tax that is a sustainable source of revenue all over the world. Then looking at the Nigerian economy, we've had issues for years now with respect to revenue generation. Over the years, we have practically operated deficit budgets whereby the expenditure exceed the revenue that we have on a yearly basis. And so when our expenses is more than the revenue, there's no other thing the government will do than to resort to borrowing. And when governments borrow, we incur cost of servicing the debts that we have incurred over the period. So the problem we have over the years, we have a low tax to GDP ratio. Prior to 2024, we have recorded less than 10%. And just 2024, we recorded 13.5%, which is still below the average for African countries. the average for African countries. So, and looking also at our over-reliance on oil revenue, despite that, we have recorded the deficit budget, just as I've said before. And so we have had increasing high debt servicing, which has eaten deep into our revenue. This has been the problem we have in the economy. And so looking at the physical environment also, we've had these challenges like the low tax compliance and weak enforcement. We have multiplicity of taxes. Businesses will open, and before you know what is happening, we have various authorities, even people who represent the authorities who come to collect one tax or the other, especially in the local governments and state governments. So this has been a problem. We have complex and opaque tax administration processes, multiple tax agencies, complex and obsolete tax laws. And so all these problems we have in our physical environment justifies the need for tax reform. So that's actually what gave rise to the reform that we have recently. Can we go to the next slide, please? So the next slide will show us the process that this what actually happened with respect to the tax reform we just had recently. On the 7th of July 2023, the president established the committee, the Presidential Fiscal Policy and Tax Reform Committee, and which was finally inaugurated on the 8th of August. So this committee sat and did a lot of work, meeting with the stakeholders to be able to come up with 4 different bills which they presented to the president, which eventually went to the House and went to the Senate, and it was passed. The bills were actually were passed and eventually harmonized and went to the president for his assent. So finally, on the 26th of June 2025, these laws were signed into law by our president Bola Ahmed Tinubu. And so we have 4 laws available for us to look at. So in the next slide, you will see the objective of the reform. The principles on the left-hand side are the various principles that the committee took into consideration, built it into this tax acts that they actually came up with. So they try to ensure that the law itself will be as simple as possible. For instance, in the personal income tax we used to have before now, you see the manner of computation of the tax. You see how you do your the consolidation relief. You see the rigorous procedure, even in the capital allowance computation, the rigorous procedure you have to do. If you're not an accountant and you don't have the prior knowledge, you can't just pick capital allowance and start working on it, doing the deduction and addition, the restriction. So what they have tried to do is to make it as simple as possible, harmonize all the various laws we have, put them together. For instance, the Nigerian Tax Act, it amended about 14 different laws and repealed about 12 laws and revoked even that modification order, and giving us a single act, which is to also make it simple for everybody to understand and try to manage the language in such a way that anyone who is not a lawyer can read and understand. So all these principles we are taking into consideration in coming up with the law that we have before us.
Okay. Àwọn Hausa yẹn wọ́n nídìí Indomie o. Mi ò mọ bẹ́ẹ̀ ti fẹ́ ṣe o. Bóyá tẹ́ bá lè kọ́.
Okay, please, I can go on now. So look, the 4 laws we have before us, we have, can you go to the next slide, please? So the 4 laws we have before us are the Nigerian Tax Act, the Nigerian Tax Administration Act, the Nigerian Revenue Service Act, and the Joint Revenue Board Act.
Hello, Dr. Angela, sorry to butt in. Kindly unmute your microphone, ma. We're unable to hear you.
For how long,
yes.
Please?
No, just about 20 seconds or thereabout.
Oh, sorry about this. Let me last, please, so that I will know how to. Where did you hear me last? So that I'll know.
Just about when you started on this slide, ma.
Oh, okay, on this particular slide.
Yes, ma'am.
Oh, beautiful, beautiful, beautiful. Okay, so we have four laws before us: the Nigerian Tax Act, the Nigerian Tax Administration Act, the Nigerian Revenue Service Act, and the Joint Revenue Board Act. For the Nigerian Tax Act, what it does is to tell us what needs to be taxed. It harmonizes all the various laws, just as I've said before. It merges all the overlapping tax laws and provides a unified fiscal rule and regulations that governs taxation in Nigeria and is compliance for individual and businesses. So it has given us a single, a unified law that we have to operate, showing us what needs to be taxed. So for the Nigerian Tax Act, Nigerian Tax Administration Act, it shows us who does what, how the taxes are to be collected, and who does what. So it provides the legal framework for the fair, consistent, and efficient assessments, collection, and accounting for revenue accruing to the various authorities. Now, the third one, which is the Nigerian Revenue Service Act, repeals the Federal Inland Revenue Service Establishment Act 2007 and establishes the Nigerian Revenue Service to assess, collect, and account for the taxes and revenue accruable to the Federation. You agree with me that once, there's this misconception that people used to have. Once they hear Federal Inland Revenue Service, the first thing that comes to their mind is that they are the one in charge of collecting taxes that accrue to the federal government. So they don't really understand that Federal Inland Revenue Service is not just for the federal government. They are there. What they ought to do, they ought to be the body. They are the body that should collect revenue that accrues to the whole federation. As far as revenue service is concerned, revenue collection is concerned. So that Federal Inland Revenue Service did not give us, it doesn't really depict what the service is meant there to do. So looking at what the committee has done, they have tried to give us that name that will, once you hear it, it will resonate with what the intention of the law, what the service is supposed to do. So that's basically what that law is all about. And the last but not the least, among the four acts, Joint Revenue Board Act establishes the Joint Revenue Board, the Tax Appeal Tribunal, and the Office of the Tax Ombuds to enhance the coordination among the various levels of tax authorities and ensure fair settlements of disputes that might arise from tax administration. Okay, can we go to the next slide, please? Now, let's get to our business for today, because you will agree with me that the laws in question, the four of them, they are really encompassing, that if we want to start to discuss in details, we may not really be able to marry everything. So we want to focus on the Nigerian Tax Administration Act 2025. So the structures of the Act, the Act has 5 chapters, 148 sections, 8 parts, and 5 schedules. So let's now go into the Act proper. The next slide, please. So the NTAA, like I said before, it provides a uniform procedure. It gives us the legal framework that gives us a uniform, that provides for a uniform procedure for a consistent and efficient administration of the tax laws in Nigeria in order to facilitate tax compliance by taxpayers and also optimize tax revenue. So basically, persons, the question is, who does this act really apply to? So any person required to comply with any provision of the tax laws, whether personally or on behalf of another person. This act also applies to that person. Let's go to the next.
Dr. Angela, ma. Hello, Dr. Angela. Your network went off for about 15 seconds, so we couldn't hear you clearly. So if you could just go over this particular slide all over again, ma.
Next slide, please. Yes. Like I said, doing this, the other person is doing that. No, there's a uniform procedure that has to be followed as far as administering the tax law is concerned. So that's what this act has done for us. And any person who ought to comply to taxes, this law applies to you. Whether you are representing somebody, like you are a consultant, or you are dealing for yourself, the law applies to you. So looking at the key changes with respect to this law, there's a clear jurisdiction now. It specifies clearly the jurisdiction of the tax authority. For instance, the Nigerian Revenue Service has the exclusive responsibility to administer taxes on companies, individuals employed in Nigerian Armed Forces and Nigerian Police Force other than in civilian capacity, officers of the Nigerian Foreign Service. Excuse me, please. Okay, sorry about that. Yeah, so including the non-residents, and it also has the power to administer income tax, stamp duties, and tax incentives. Before now, for instance, tax incentives, we don't really have a specific provision in the law with respect to tax incentives. Also, looking at tax incentives, a very broad area, because the government is interested in the tax expenditure. They need to understand the cost, the opportunity cost of granting incentives. So they cannot be able to do that when they don't have data, don't have appropriate information. So this is also a welcome development. The revenue has the power to administer income, stamp duties, and tax incentives. So really, for the relevant state authorities and the Federal Capital Territory, they are responsible for administering taxes on resident individuals in respect of their income, profits, or gains. So what the law has done for us is that it has also ensured that there's collaboration among the various revenue authorities. A collaboration in the sense that there's a proper exchange of information now, and also it provides for joint audits. Then we don't need to start having a separate memorandum of understanding before we can have the NRS can be part of auditing individuals. So there's no need. There won't be, because the law has given a provision with respect to that collaboration. So that's what this law has provided for. Also, delegation of functions subject to approval by the relevant government. Now there could be delegation of functions. The state government can actually delegate the NRS to carry out some functions for them, as long as there's appropriate approval by that government. Also, there's flexibility. Now, tax authorities can also do what is necessary and expedient in the administration of taxes in accordance with the NTAA 2025 and any other law that is enacted by the National Assembly. Okay. And the next on our slide is on registration to obtain tax ID. When you talk of registration, every taxable person, ministry, department, or agency of government, and non-residents has the obligation to register for tax, and obtain their tax ID. However, for non-resident persons who derive only passive income from Nigeria, may not register but must provide relevant information as may be prescribed by NRS from time to time. Okay, next slide, please. Okay, still on tax ID. Looking at the tax ID, every taxable person can actually request for tax ID, and it is the obligation of the revenue authority to notify any taxable person where there's a reason for them not to issue the tax ID. They have the obligation to notify that taxable person within 5 days, 5 working days. Okay. And also, there's provision for unification of tax ID in case of multiple tax ID. For instance, we've seen cases whereby maybe a corporate body may have more than one tax ID. So in this regime now, it's not advisable for any person or an entity to have more than one ID. So where there's a case of multiple ID, there's now provision for unification of that tax ID. Also, there should be notification of suspension of registration for in case of temporal cessation of business. If any business is ceasing operation, there's now a provision for that company to notify the revenue authority within 30 days of that temporary cessation. So once this notification is done, the tax ID will be suspended, and it can also be activated upon activation of that business. Tax ID is not transferable. We have to also note that tax ID is not transferable. You can't transfer it from one person to the other or from one entity to the other. So each person ought to have a unique tax ID. So in all your returns, notices, correspondences, is supposed to carry this tax ID. We've always had this also. Banks, insurance companies, stockbrokers, or other financial services in Nigeria is to ensure that every taxable person transacting with them provides this tax ID. Okay, the next slide, please. So still, I've also mentioned some of these in the previous, and while I was explaining the previous slide. There could be suspension, and then upon that notification, the tax ID will be suspended and be classified as dormant and will be activated as soon as the business is being activated. So the tax authority will deregister the tax ID of a taxable person that has permanently ceased to carry on a trade or business. Okay, the next slide, please. On the income tax returns, we have our self-assessment returns, as we've always known. You know, we have self-assessment returns. We also have returns by non-resident companies. For the self-assessment returns, a small company, in making its returns, can actually submit a statement of account that he will attest to in place of an audited account, instead of submitting a full-fledged, you know, like we used to know, financial audited financial statement. You can actually submit a statement of account attested to. However, the revenue, everything with respect to returns filing, I believe that the revenue authority will still provide us with detailed guidelines that will guide respect to returns, because we have so many returns that are to be provided by taxable persons now, in order to ensure transparency, because you know, where there's transparency, we increase trust in the system. So for filing, existing companies still remain 6 months after accounting year end. For new companies, 18 months from the date of incorporation, or 6 months after their first accounting period, whichever is earlier. For cessation, it's still within 6 months of cessation, you're expected to file your cessation returns. So now we now have returns. We have an estimated returns. This was not there before, but now we have estimated returns that will be filed by companies that are engaged in liquefied natural gas. That's midstream company engaged in LNG. They are to submit an estimated return of their profit and loss, not later than 2 months after the commencement of each accounting period. This actually resemble what we used to have now, even in the upstream. So it's similar to that. So, and these returns, we can see when you get the slide, you will see all the contents of the returns. The contents include computation of estimated revenue, adjusted profit, computation of estimated revenue from all sources, and so on and so forth. However, there's also a provision for a revised return to be submitted by these companies if any of the components, parameters they use in preparing their accounts changes within the year. They are also expected to submit a revised return. And upon submission of this return, the Revenue Authority, the NRS, because they are the one they are submitting these returns to, is also obligated. They can review any returns submitted to them for validation purpose. And where this return is supposed to be filed and is not filed, the revenue also has the obligation, has the right to assess based on best of judgment, using estimates to assess the company accordingly. Let's go to the next slide. Next slide, please. Next slide, please. Can you hear
Doctor,
me?
slide number what do you want us to put up?
Lost me again.
For a little while, but it's okay. What slides do you want us to stick on?
I hear
Can you
you.
hear me, please?
Yes, we can hear you.
Yes, yes.
Please, can you let me
We can't hear you again.
you can hear me, please?
I
can
think
hear
it's
you.
from the key highlights. I think that's where she wants to start. Please.
Seems nobody is hearing me.
We can hear you.
Mr. Shigo, please put a call
We can hear you.
to put a call through to
Hello?
doctor. It seems our network
Please,
is
can you
acting up.
hear me?
We can hear.
Can you
we
hear
can
me,
hear you.
please?
We can hear you.
Yes, we can hear you.
Can you hear me?
Please start a bit idea, Mo.
Yes,
She
Mr.
can't
Shigo. Hear us.
Start. We can hear you, man.
Speak anything
We
from
can
our
hear you,
side.
ma'am.
So, Mr.
Okay.
Shigo, kindly put a call through to her so that she can disconnect and join over again.
Can you hear me, please? Okay, the next slide. Can you hear me? Were you hearing me
Yes.
before now?
We could hear you loud and
We
clear.
can
but it
hear
seems
you,
you
ma'am.
can't speak anything
We
from
can hear you.
Okay, slide 18.
slide 18.
Next slide.
Okay.
Next slide, please.
Okay, so ladies and gentlemen, while we're waiting for the resource person to reconnect, like I said earlier, all our technical sessions are recorded and posted on our YouTube page. The link to the YouTube page has been shared in the comment section. Likewise, the links to our Facebook and Instagram pages. On those pages, you would find useful materials that we share every now and then. Kindly go there and do us a favor by subscribing to the YouTube page, like and follow our Facebook and Instagram pages. It is the least that you could do for us. Thank you. Also, it was mentioned earlier that esteemed professional colleagues should kindly desist from sharing personal details on the comment section, but it seems it has become the life of every accountant who attend technical sessions here and there. We share our membership numbers, we share our full names, we even go ahead and share our email addresses. I don't think this should be so. You know, we mentioned earlier on that the attendance register that has been collated before this meeting will be used to communicate further with us. To some degree, there's a degree of data privacy in there. Not this practice whereby we just throw our personal details for numerous people to just see. Just the other day, during the week when Anchor National hosted 2 webinars, one on Monday, one on Wednesday, you could see professional members displaying
please,
their
I'm
membership
so sorry
numbers,
about
email
this.
addresses.
So sorry about this network. I'm actually in my village now, please. So
Oh,
I'm so
okay.
sorry
Dirty
about
December.
that. Please, I'm
You're
sincerely
welcome back.
sorry about the network issues. Yes. Okay, so can we
Okay,
now?
but can you hear us, Nima?
Yes, I can hear you people. Can you hear me? Can you hear me,
All right,
please?
we can hear you. So please go ahead, ma.
Okay.
Please go ahead, ma.
Okay. So so we are talking of the returns with respect to individuals here, and this still remains what we used to know. Every taxable person, whether or not liable to pay tax, is to render its return. Also, non-resident persons liable to pay tax in Nigeria must file, except where you are earning passive income in Nigeria. And then for those people who are earning passive income, from time to time, they also have the obligation to provide whatever information that the revenue requires of them. So for payee also, the employers are to file the returns of their employee. Now, employee also are required to file an annual return of their income from all sources. And their income from all sources include income from employment, income from chargeable gains, for instance, income from other businesses they do, or business, trade, or other profession that they earn income from. So they are to file their annual returns from all sources. So let's go to the next slide, please. So for the petroleum operations, this is also similar to what we have now. They are also supposed to file their returns, estimated returns, and their revised returns where necessary, their actual returns also, which will be reviewed by the Revenue Authority. And where those returns are not provided, the revenue is also have the obligation to assess them based on best of judgment. So let's go to the next slide, please. So the next slide. Next, please.
Doctor, we're on slide 20. You want us to move ahead?
Yes. I've said something on this. This one still has to do with the actual return that petroleum operations file. There's no serious change. There's no change there. It's just what we used to know before now that we still have there. When you get the slide, you can go through. So I want to focus on where we have made key changes. So can you go to the previous one? Okay. Yes, go back, please. Go back again. Okay. It's okay. Go the next one now.
Okay.
The next slide. Yes. So here we are talking of royalty. Royalty is also one of the new things that came in on board, because prior to now, the FRS have not been collecting this revenue. So it's a new introduction into the law now. FRS is now collecting this revenue, collecting these returns now. So there's a monthly returns that petroleum companies ought to also file. They have to file monthly returns of petroleum royalties. And the people who are supposed to file these returns, they are every licensee or lessee engaged in petroleum operation is expected to file these returns on or before 14th day of the following month. Whether or not production took place, they are actually supposed to render these returns. Also, in addition to the estimated monthly returns, the annual returns also will be filed within 5 months from the end of accounting period of the company. They will file the annual returns of petroleum royalties. So, and then also we have a return that is supposed to be rendered by priority companies. Priority companies are companies that have taken advantage, or that are taking advantage of the economic development tax incentive. So economic development incentive is the incentive that now replace the pioneer status incentive. Before now, we have our pioneer status incentive, whereby if you have your product listed in the products or services that you can claim such incentive, you will get a tax holiday for a period of 3 years, which can be extended for a period of 2 years, or a period of 1 year and another period of 1 year, making it a total period of 5 years tax holiday. Now, if you look at this incentive before now, let me just use this opportunity to give us a hint on this economic development incentive. So if you look at the pioneer status incentive we have before now, is not really it does not really stimulate economic growth, because it distorts it actually distorts the economy. Why did I say so? Because it does not provide a level playing ground for every organization to thrive. And the nature we have seen cases whereby organization will take advantage of this tax holiday, and at the end of the day, they will move out of the country after enjoying the tax holiday. And at the end of the day, the country has nothing to gain granting this tax incentive. So the economic development incentive that we now have now is performance-based, because the companies that have that fall under the sectors, priority sectors that are listed in the law, in the schedules to the law now. If you fall under there, you have a threshold of investment that you're supposed to make, investment on investment on assets. So based on this investment, you will be given a tax credit, a 5% on the investment that you have incurred. So this tax credit, you will still do your tax computation normally the way you should do it. After doing your tax computation and arriving at your tax liability, the tax credit that will be granted to you, you will use it to offset the tax liability that you have. For example, if you have a total tax liability of 200 million and you have a tax credit of 100 million, you will pay tax of 100 million to Nigeria. Unlike what we have before now, where you'll be given tax holiday. Throughout that period of your tax holiday, you will not pay tax. And even after that, you still have other incentive that you will enjoy after your tax holiday has expired. You can still enjoy. Maybe you will decide to put on loss in your books. And after the end of the tax holiday, you start claiming those losses. So it's not business as usual again. This is more economical and will stimulate the growth of the economy, because if you have tax credit and you have tax liability that you determined, you can offset and you pay us the outstanding. If you don't have outstanding, fine and good, but once you have outstanding, you'll be able to pay the country something as tax. So this is commendable as far as the law is concerned. So there's a return that is expected from these priority companies. This return is there to also file a return of they are supposed to submit this return side by side with their annual return. So whatever they have done, they are supposed to file these returns alongside with their annual income tax returns. Then for deduction of tax as source, like we know before now, withholding taxes is also part of it. There's a return. We have regulation guiding us. So we leverage on the regulation in determining the rates as far as the deduction is concerned. Let's go to the next slide, please. Now we've talked about, okay, we also have monthly returns of mineral royalties. That's other royalties that is not tied to petroleum production. We have other royalties. So for those ones that also, for those ones too, we also have their monthly returns that they are expected to file. These returns are to be filed on or before 21st day of the following month of the payment of the return, royalty. So these returns, we can see the content of the returns also. So these returns should be filed to the NRS. And NRS shall review the returns upon filing, where there is need for reassessment, they will reassess accordingly and raise additional assessments.
Apologies for that, please.
Okay. Also, we have estimated returns for non-resident shipping and airline companies. So for non-resident shipping and airline companies, we now have estimated returns that they are expected to file on or before the 21st day of the following month. So non-resident persons engaged in operation of transport by sea or air into Nigeria, covering carriage of passengers, mail, livestock, or goods shipped, loaded in Nigeria, they are expected to file returns, which will include their detailed gross revenue statement of Nigeria operations, their total sums receivable during the period, all invoices issued to relevant customers, evidence of tax payment. They are to file these returns. And these provisions, the law also made us to understand that this provision should not be interpreted to exempt companies from filing their annual returns. they are also expected to file their annual returns in as much as they are filing the estimated returns. So, or they are also supposed to file returns of non-freight operations or any other incidental income and payment of tax in respect of its non-freight or incidental income. Okay, next slide, please. So we also have virtual asset service providers returns, the returns that is expected of people who are engaged in exchange, custody, or management of virtual assets services. They are to file these returns in addition to their income tax returns. So they are to file the returns of their operations. So these particular returns will be able to, they will give us description of virtual asset services, date of transaction, type and value of virtual assets, sales value of virtual assets, name, address, telephone number, email address, and tax ID of customers, including their NIN customers that are individuals, details of any counterparty involved in transactions. So all these, they are expected to file. Let's also bear in mind that the Revenue Authority is going to issue guidelines that will also help the taxable persons to understand how they are going to go about these returns. Okay, with respect to tax incentive also, no, go back. We still have something in that slide, tax incentives. For tax incentives, you know, we are talking about other tax incentives too, in addition to the one I've talked about, the priority sector economic development incentive. So we have for other tax incentive, the law now expects any taxable persons enjoying incentives administered by relevant tax authority to file an annual return of their tax incentives. So this will be in a form that will be prescribed by the service, and it should cover income tax and any incentive other than those which are generally available to all taxpayers. So any incentives that are not generally available to all taxpayers, definitely they are going to file returns of those tax incentives. So the revenue will provide the form in which these returns are going to be provided. So also the state tax authority is expected to transmit all the annual tax incentive returns that will be filed to them by individuals. They are expected to submit that return to NRS within 60 days after the due date for filing annual tax returns. Remember what I said at the beginning of this presentation, that these tax incentives which the law has provided that FIRS should manage, you know, the essence is for us to also have the data to be able to have a consolidated information whereby we can actually ascertain our tax expenditure. Because if the government does not know what it costs them to give incentive, they will not be able to plan. They will not be able to know the incentives that are not actually yielding returns. You know, they will not be able to know the ones that they are supposed to scrap, review, and modify or something like that. So that data is very key. So that's the essence of this introduction in the law. So also we have surcharge, we have returns, but this has not fully come into effect because there are supposed to be other publication in the official gazette before this can actually take effect. So let's just go on. We just know that for knowing's sake for now. So also with respect to VAT, we know our VAT returns before now, and then the contents of the returns, we also know that, so it has not really changed, but we know just a way for me to like talk a little on VAT, even though we are not on dealing on Nigerian Tax Act, but I can talk on that so that for some of us that have not had that information, we'll also have the privilege to have the information now. For VAT, basically we have some changes in VAT. We have expansion on the tax VAT exempt item and VAT zero rated item. So basically the items that affect every Nigerian, every common Nigerian, like the items that relates to goods for food production of food that we eat, basic food item, and also that affects like pharmaceutical health, and also education, and transportation, for instance, and even generation of electricity. All these have been moved to zero rated. Why? This is to ensure that, for those who are producing this will be able to claim all their inputs VAT, and by such doing, it will reduce the cost of those items on the individuals. So we are expecting that as this has come, as this is coming into effect, that the goods and services that have been moved to zero rated items, we're expecting changes in the prices of such goods such that they will be more affordable to every Nigerian. So another addition as far as VAT is concerned is on the claims of input VAT. Before now, input VATs that are claimable, input VATs that are claimable relates to that which relates to the goods you produce. Input VAT you suffer on overhead, input VAT you suffer on capital expenditure have not been claimable before now. But now with the new tax law, you can claim all your input VAT that you have suffered. That's another thing that the law has brought in. And however, for your capital expenditure, before you can claim any capital allowance on any capital expenditure, any VAT that you are liable to pay on that asset must have been paid. VAT or import duty. If you don't pay your VAT, that capital allowance will be withdrawn, will not be allowed. So let's go on with the returns. We have for VAT returns filing for small companies. Filing of VAT returns does not apply to small businesses. However, upon ceasing to be a small business, monthly VAT returns filing becomes mandatory. Small businesses exempt from VAT returns filing are also exempted from provision of sections. If you go through these sections, it still has to do with payment. It has to do with payment of penalty for non-filing or something like that. So, of course, when they are not filing, they will be exempted from any payments that relates to non-filing. So that's basically what that is trying to tell us. So exemption of small businesses from VAT returns filing does not apply to companies engaged in petroleum operations. Where NRS deploys a technology, taxable person must render their returns in real time or at such other time prescribed by the service. So this takes us to the fiscalization system, VAT fiscalization system. So, and this basically is saying that the service, where the service deploys an electronic physical system, persons that make taxable supplies must use the EFS for recording and reporting all of their supplies. So taxable person will be responsible for the maintenance of accurate records of all the transactions passing through the EFS, and the service will specify the fiscalization system to be adopted and the transition arrangement for its implementation. Can we go to the next slide, please? Okay, so this is also talking about the distribution of VAT revenue. So for the net revenue accruing from VAT, the distribution formula for the federal government is 10%, 55% to the state and federal capital territory, and 35% to the local government. Well, and the basis for distribution of VAT revenue that is at the credit of states and local government is 50% equally, 20% on population basis, and 30% on consumption. Let's go to the next slide. Let's go to the next. Okay, so for the key highlights, the key highlights on returns filing and for other disclosures, we have other disclosures that are also expected, like for banks, insurance companies, stockbroking firms. Please, just give me a second, please.
Ladies and gentlemen, thank you for being there. While we're waiting for Dr. Angela to rejoin.
Okay, please, I'm back here, please. I'm sincerely sorry,
okay.
please. I had to
Okay,
attend to this.
Please proceed, ma.
Okay, so for other disclosures, for the banks, insurance companies, stockbroking firms, any other financial institutions, with or without demand, they are expected to file their returns of their new customers. And also for the existing customers, they are to file returns. For individual, all transactions they incur, you know, we respect that is up to 25 million in a month. They are to submit returns for individual transactions. Then for body corporates, they are also expected to file transactions where the cumulative transactions in a month amount to 100 million or more. So for tax planning also, there's now disclosure of tax planning. So for every tax planning that is being, you know, made by any taxable person, it is expected that you have to disclose. Now, the law defined what tax planning is. It said any transaction or agreement that gives or is expected to give a person a tax advantage is disclosable, and all information relating to it should be provided to the relevant tax authority with or without notice. So you don't need to be notified. Once you make any arrangement that you engage in that will give you tax advantage, you are expected to file the returns to the relevant authority. So it also defines what tax advantage is. Tax advantage is a relief or increased relief from tax, repayment or increased repayment of tax, avoidance or reduction of a charge to tax or an assessment to tax, avoidance of a possible assessment to tax, deferral of a payment of tax, or advancement of a repayment of tax. So every taxable person will not say that you don't understand what tax planning or tax advantage is, because the law has specified has defined what tax advantage is, has defined, you know, what you should do once you are enjoying any form of tax advantage. So let's go to the next slide, please. Also, we have a provision in the law now telling us what prohibited tax avoidance arrangement is. Now, if you are engaging in any arrangement, tax avoidance arrangement, there are certain tax avoidance arrangement that is prohibited by the law. And it says any arrangement where, having regard to the facts and circumstances, it is reasonable to conclude that the main purpose of the arrangement was to obtain a tax benefit or advantage. You know, it is so any arrangements where, having regard to the facts and circumstance, it is reasonable to conclude that the main purpose of that arrangement was to obtain a tax benefit or advantage. Obtaining the tax advantage is contrary to the object and purpose of the provisions of the law, that it will result directly or indirectly in the misuse or abuse of the provisions of NTAA, or that arrangement lacks commercial substance or coherence in whole or in part, then that arrangement is prohibited as far as the law is concerned. And so the relevant tax authority can counteract any prohibited tax avoidance arrangement by way of adjustments, disregarding it, or recharacterizing the arrangement through an assessment or modification of an assessment, or amending that assessment, or even disallowing that assessment. So that's basically the provision of the law as far as prohibited tax avoidance arrangements is concerned. Let's go to the next slide, please. Okay, we also have every person is supposed to also maintain proper books of accounts. And also we have a return statement or form provided by or on behalf of any person will be treated as provided by that person. So any returns you submit is a valid return. That's what this place is telling us, except where proven otherwise. And so we now have something that we now have an introduction of accredited tax agents. Before now, we don't used to, there's nothing like accrediting tax agents, but now the law has provided it specifically that taxpayers may comply with the provisions of the law representing itself, or they will be represented by an accredited tax agent. And so the relevant tax authority, which is the NRS, will set out requirements for this accreditation, and returns will not be treated as filed except it is filed by the taxpayer or represented by an accredited tax agent. So now there will be procedure for accrediting a tax agent, which the Revenue Authority is going to provide such information to us as time goes on. So all tax returns should be attested to as true and complete. Let's go to the next slide, please. Okay, so we also have assessment, as we used to know before. Now we have self-assessment, administrative assessment, we have additional assessment. However, for the currency of assessment, well, before now we used to know that currency of assessment, the currency of assessment is the currency of transaction. That's the currency of tax. If the transaction is made in foreign currency, that tax has to be paid in foreign currency. Now we have an introduction which is also to the benefit of the taxpayer and also for the to also stimulate the economy at the end of the day. So all taxes is to be assessed and payable in the currency of transactions. Taxes assessed in a currency other than Naira should be paid in the other currency or even in Naira at the official exchange. Before now, we don't have this, but there's an introduction of transaction that is made in Naira now being paid, made in foreign currency can now be paid in Naira, but at the official exchange rate, while assessments and payment of taxes. However, for assessments and payment of taxes relating to petroleum operations, they are specifically stated that they are in US dollar. So this other provision will relate to any other transaction that is other than petroleum, any other transaction other than that which is made in a petroleum operation. Let me put it that way. Okay. Oh, I don't understand what happened here, but this place is just trying to tell us, give us the processes of revising assessments. When you serve assessments, the assessment can be served through registered post, courier, in person. And when assessment is served to a taxpayer is expected to object to that assessment within 30 days from the date that assessment from the date that assessment is being made. And also upon objecting that assessment, the Revenue Authority has 90 days now to also respond to such objection of the taxpayer. The tax authority is to respond to the objection of taxpayer to a notice of assessment within 90 days. Otherwise, the objection of that taxpayer will be upheld. Also, a taxpayer has right to appeal. Right of appeal. You can appeal any judgment of tax appeal tribunal. You can appeal that judgment to the High Court, provided that it shall pay 20% of the disputed amount into an account designated by the High Court as security before there will be hearing of that appeal. And then if the judgment of High Court he's still not comfortable with it, he has right to appeal to Court of Appeal and then to Supreme Court. So that's basically what that place is telling us. Let's go to the next slide, please. Okay, we have refunds. With refunds before, we know our refunds before now. Refunds of overpayments or excess of tax due is to be paid after proper audit by the tax authority. And we have 90 days within that decision, to process for the refund. And there's an option. The taxpayer can choose to use that refund, instead of collecting refund, they can choose to use it to offset future tax liability.
Ladies and gentlemen,
Yes,
it appears we have lost Dr. Angela
back
once
here
again.
again. Oh, I'm so sorry about that. I'm back here again. Okay, can you hear me?
Okay, please go ahead, Ma. You have about 10
Can you hear
minutes
me, please?
to round up, Ma. Yes,
Okay,
we can hear
okay.
you.
So on that, valid request should not be more than 12 months after the relevant transaction took place. It means that if you have a transaction that you want to make refund for VAT, you're expected to make that refund request within 12 months after the relevant transaction took place. Also, refund is to be processed not later than 30 days of receipt of the request. There's an option for refund amount to be offset against, please help me correct that, to be set off against the tax liability of that taxpayer. Please help me make that correction on that slide, please. Okay, let's go to the next. There's a correction to be made. The refund amount is to be set off against, help me correct that off, and be set off. Be set, jammed together. So just separate them and then offset.
Okay.
Thank you.
Okay.
Thank you. Next slide, please. Okay, so we still have in the law, we have the tax enforcement provision that we used to have in the FIRS Establishment Act. You know, the law has consolidated everything, so we have these enforcement laws listed also in the Act. So like the power to demand for returns, power to assess land building, power of substitution, distraint. So all these also we have them in the Nigerian Tax Administration Act. Now we have a stringent penalty for non-compliance. So everybody has to be up and doing. We also have provision for whistleblowing rewards, whereby there's now rewards and also confidentiality for persons who provide intelligence and information that would assist the tax authority carry out their duties. Next slide, please. Next slide. Okay, so we have also, the law has tried to also protect the taxpayer, you know, as much as possible. We have a provision introduced called advanced ruling, whereby the taxpayer can choose to, you know, seek for clarity, write the authority, asking for clarity. And the application for advanced ruling should be submitted to the relevant tax authority. And the authority is required to issue the ruling within 21 days or provide written reasons if the request is denied. And the application must include all relevant facts. If you're seeking for clarification, all relevant facts, details of any related audits, relevant legal provisions relied upon, prior dealings with the tax authority, and other additional information as may be requested, you know, for. So we have all these, and also we have dispute resolution procedures in the law. Next slide, please. So we have digitalization compliance. We have mentioned before the returns that is expected to be filed by virtual asset service providers. We also now have introduction of the National Single Window Portal, which the service is already is ongoing right now. A portal that will unify and streamline imports and exports, trade and transit transactions, so that there will be, you know, limitation with respect to how, you know, we use manual and paper processing, and making it easier for people who are involved in trading. So let's go to the next slide, please. So like I said before, there's now stringent penalties for offenses for non-compliance. So we need to open our eyes to these penalties. So I've taken time to highlight the various offenses and the respective penalties. So when we get the slide, we should just take our time and go through. For instance, we have when a taxable person awards contract to any person who is not registered, you will be penalized. You will have to pay a penalty of 5 million. You can see the government is not smiling again. The government have made provision for a lot of concession in the law that you can take advantage of, and you will be able to, you know, plan yourself. For instance, you can see for our small businesses, we see the threshold expanded. We see the chargeable gains, you know, the chargeable gains exemptions, like loss on compensation on loss of office expanded from 10 million to 50 million. A lot of concession in the law. So you have no reason to, fall foul of the law. You have to comply so that you avoid all these unnecessary penalties. Like we have failure to register, failure to pay any tax, you have the penalties, failure to keep proper books, they have the penalty, failure to grant access to deploy technology after 30 days of receipt of the notice, you have penalties. So for the fiscalization, for the e-invoicing, everybody has to try as much as possible to comply to avoid these penalties. Let's go to the slide, next slide. Just move down. You can go through the penalties and offenses and penalties when you get this. So for compliance expectations, everyone is expected to register accordingly. It is very important to register to avoid penalties. Also, engage with stakeholders. Try to engage with various stakeholders. If you are an employer, engage with your employees so that they will understand what is coming. Engage with your customers, your vendors, your shareholders, so they will understand how it affects them. And also record keeping. Keep your records straight. If you're an individual, you're doing other businesses, keep your records separate, your business records from your own personal records so that you won't fall foul of the law. Try to align with the new provisions. Update your organization's accounting to align with the new laws and the digital reporting requirements. Also, ensure that you file your returns timely to avoid unnecessary penalties and sanctions. Adequate cooperation with tax officials and authorities is also recommended, because if you don't cooperate with them, you may be penalized. Also, disclosures, all the disclosure requirements like the tax planning, disclosure arrangement, try to take note of that and know when you need to respond. Also, mandatory use of integration of technology, try to take note of that. And most especially, tax awareness, capacity development for staff and tax officers cannot be overemphasized. You need to make sure that you're on top of your game. In conclusion, I have two quotes down there. The first quote by Ngozi Okonjo-Iweala, and she says, the real incentive for investors is not zero tax, but a predictable and a fair tax system. And you will agree with me that what the law has done, the president and as well as the committee, the Presidential Fiscal Policy and Tax Reform Committee, what they have done is to ensure that the system is simplified and there's a kind of a level playing ground for every company to compete. And also there's a provision, concession to enable the growth, to stimulate growth of businesses. So these are what they have put in place. And also the last and not the least quotes down there, a quote by Angela Nnamani says that paying your fair share of tax is not only a legal responsibility, but also a civic duty, as taxes are the essential lifeblood that sustains governments around the world. So we all owe it. Is our obligation, civic obligation, to ensure that we pay our fair share of tax, because without this revenue, the government may not be able to achieve every good goal that they have for the economy. Thank you for this opportunity.
Dr. Angela, we remain so grateful to you for creating the time to take us through the nitty-gritty of the Nigerian Tax Administration Act. I'm sure if you're not constrained by time, I'm sure if we give you another 1 hour, you would have gone on and on, elaborating and offering insights into what details are packed in the new act. Once again, we appreciate you. Thank you so much for the time. To offer a little bit of recap, there's no time on our side as such. I'd like to hover a little bit over what Dr. Nnamani has mentioned. During the presentation, she walked us through the act as it is, with effect from January 1, 2026. She explained that it introduces a uniform framework for administering tax laws, and it applies broadly to all taxpayers, including individuals, companies, and even non-residents who are doing business in Nigeria. One of the major highlights was a clear definition of roles between the Nigerian Revenue Service and the state tax authorities. She emphasized strong collaboration information sharing, and joint audits where necessary. She also made a very, very, very key remark with respect to the tax identification number issues. Do you get? So the new regulation requires that all income earners must have a tax identification number. Do you get? So this will particularly affect income tax return requirements, filing timelines, and of course, what is now expected from companies, individuals, and of course, specialized sectors like petroleum and LNG operations. Just to round it off, the key message is simple. The Nigerian Tax Administration Act, it raises the bar for compliance, but also provides clearer rules and better protection for taxpayers who do the right thing. As professionals, our number one priority is to maintain compliance. Let us help our employers. Let us help our clients in the best way to implement the new tax act and of course to stay compliant so that we will not run foul of the law. Once again, Dr. Angela, thank you so much for taking out of your busy schedule to impact on us this evening. You mentioned earlier that you are already far away in your village. So that means only one thing, that for you, 30 December has commenced in earnest, but you are still gracious enough to create a time for us to take over, to run over this session. We remain ever grateful to you. Thank you so much. Professional colleagues, I wouldn't know if we have questions. As many who have questions, kindly indicate by raising up your hand so that we can take about 5 questions before we close the session this evening. I'm already seeing some hands up. Also, if your question is on how to get the slides, the moment Dr. Angela gives the go-ahead, we have the slide hosted on the downloadable link. The moment she gives the go-ahead, we'll share that link in the chat section. So please, if your question is about how to get the slide, kindly sidestep that. I'm asking Dr. Angela on behalf of everybody, Madam, can we share the slide?
Yes, you can share the slide. Yes.
All right, so everyone, please go to the chat box. The link to download the slide is already in there. So I'm seeing one hand up already, and that's my boss, Mr. Additional Araye. So, Mr. Araye, please, over to you, sir. Unmute your microphone and speak, sir. Okay. Okay, while we're waiting for Mr. Araye to unmute his microphone, Mr. Nnamani Shedrack, if you are there, kindly unmute your microphone and speak, sir.
Okay, thank you so much, Dr. Angela, and thanks to the organizer. I truly appreciate everything that has been said, and thanks for this exposure. So, having said this, my name is James Shedrack Nnamani. My question is this: as part of the points you made mention of zero VAT taxes, transportation, health, pharmaceutical product, agricultural area. So I want to ask, like a laboratory now that is into a business, and maybe the organization decides to buy some equipment, and those equipment, they actually charge VAT on it. Now, my question is this: when such equipment is being paid for in full, inclusive of the VAT, will that VAT be, what's it called, refundable? That means, is that VAT claimable as per health sector, which is laboratory services? And then another question I want to ask is this: since health services are zero VATed, as it was mentioned, that means if all the record of the system are adequately kept, adequately filed, are all the VATs charged on any services provided to the laboratory in the course of attending to patients, which are clients, are those input VAT, are they claimable? That's my question on that. And then for personal income tax, I want to ask, if maybe a gift is given to me in form of cash, is it also what's it called? Is it taxable income? And then if I want to stay clear from taxable personal taxable income, how best can I tell anyone who is to give me or gift me on the descriptions? So thank you. That's my question.
Okay, thank you, Mr. Shedrack. Doctor, please note the question. The next person on the list is Mr. Sunday Ademola. Kindly unmute your microphone and speak, sir. Mr. Ademola Sunday. Okay, while Mr. Ademola Sunday is preparing, I can see the hand of Mr. Moses Ogundoke.
Sorry,
okay.
sir.
Mr. Sunday Ademola, please go ahead.
Yeah, thank you so much. I want to appreciate our facilitator, and of course, she has actually done justice, especially questions. Number one is that you see, well, you are talking about we not patronizing someone who hasn't registered with tax authority, at least have a registration ID. Are you saying that we can't patronize the roadside providers of goods and services? We have mechanics, we have the tailors, we have, because as a company, you may want to repair one or two things, and then you're on your way traveling and you just have issues. Service provider. Are we saying that it's forbidden for us now to patronize such? So that's the first one. The issue of registration based on the tax administration, we talk about tax ID now. And who is going to be issuing the tax ID? Is it the state or the JTB, I mean, the Joint Revenue Services, or the Nigeria Revenue Service? Because before, three of them do issue out TIN. We have state TIN, we have JTB TIN, we have Federal Inland Revenue Service TIN. So how are they going to harmonize that? Or who is going to issue us the tax ID so that that will be applicable to the three of them? I mean, to both the states and the federal, as in Nigeria Revenue Services. And of course, I want to say that what is the government doing in the provision of these tax administration? I realize that a lot of these works are being done for government, e.g., collections and remittance of withholding taxes and value-added taxes are being done by taxpayer. You see, ordinarily, Nigeria Revenue.
Sorry for
Okay.
cutting you, Mr.
All right.
Sunday. Please, I heard you last when you talked about tax ID. Who will issue the tax ID? But I just realized that you're still talking. So please, let me get this last question that you asked.
Yes, on the tax ID, I was trying to let you know that before we are used to TIN, taxpayer identification number, which have been issued by different arms of this tax authority. We have the state TIN, we have the JTB TIN, and we have the FRS TIN. But now it's going to be replaced by just tax ID. Once we have tax ID, now we are now saying that who is going to provide such tax ID for us? Is it going to be the state or the Joint Revenue Board, or the NRS, the Nigeria Revenue Services? So which will be acceptable by, so that it won't be a duplication again. We go there, we get one, we get there, we get another one. So who will be responsible for the issuing of the tax ID? And the third one was on the what's it called? Our service. You see, we have a duty on this tax compliance. And one of those duties is the collection and remittance of withholding tax and value-added tax. What is the government doing? Because the Nigeria Revenue Service that is collecting, we're supposed to assess, collect, and remit to federal government. They usually got an incentives for the service provided. Now, we taxpayer, we are the one doing this work, We are the one collecting the withholding tax. We are the one remitting it. What is the government doing for the taxpayer for providing or for fulfilling this duty? Because I used to know that instead of them compensating the taxpayer for doing this, once they fail to do it, they penalize them in returns. And finally is the issue of the withholding tax. If you look at withholding tax regulation 2024, the regulation was based on the what's it called, on the Company Income Tax Act, Personal Income Tax Act, and if you look at those, and the Capital Gain Tax Act, if you look at those acts based on these new tax laws, I want to believe that they have been repealed. So if the withholding tax regulations is based on the repeal acts, are we still going to apply those withholding tax regulations, especially the withholding tax regulation 2024? Because the one that talks on the Nigeria Tax Administration Act, Section 51, that's talk about the withholding tax, did not specify the way the withholding tax regulation 2024 specified.
Mr. Adekola, thank you.
So I
Mr.
just
Adekola,
need,
thank you. Thank you, sir.
that's the last one. I just need clarification
All
on the
right, sir.
implementation of the withholding tax 2024 regulation.
Right.
Thank you.
Thank you so much, sir. Okay, next on the queue is Mr. Shefiu Olabanjo. Kindly unmute your microphone and speak, sir. Mr. Shefiu Olabanjo. Okay.
Okay, yeah, thank you very much for this opportunity. I want to start by appreciating the lecturer for that beautiful job. And without much ado, my questions is going to center on three things. The first one has to do with small companies. My understanding of a small company is that they are not expected to charge VAT. But in a situation where the company or the services being rendered is done to a large company, and such service is VATable, are you not saying the large company will go on its own to do self-accounting for the VAT that the small company has not charged? That's number one. And then number two, in a situation where we have large company, and this large company, small company renders service to large company, because we have said that small company should not charge okay, let's say small company, a large company. Yeah, how do you protect yourself as a large company? Because any company can come to you that I'm a small company, so don't deduct my withholding tax. So how do you, is there a provision on how you can protect yourself from that exposure when you don't charge them, you don't deduct withholding tax? And probably there is a tax audit at the end of the day. So how do you protect yourself? When this one is saying I'm a small company, another company is saying I'm a small company. So I need a clarification on that. And last but not the least has to do with cooperative society. Normally cooperative society are tax exempt, except they engage in commercial activities. In a situation where they engage in commercial activities, we say such activity is taxable. Are we going to use CIT as a basis for the taxation or PIT? So these are my questions. Thank you.
Thank you, Mr. Shefiu Olabanjo. Last but not the least is our membership secretary, Mr. Moses Ogunile.
Thank you very much, sir. I also want to quickly appreciate our facilitator. Thank you for doing a very wonderful job. Straight to the point. My question is a request for clarification on one of the areas of penalties that the facilitator has mentioned, and that is Section 100 of the NCAA, which states that where a company awards contracts to an unregistered person, that company shall be liable to pay an administrative penalty of 5 million naira. Now, my question is, what is the definition of an unregistered person? Is it a person that did not register with CAC, a person that did not register for VAT, or a person that did not register for tax ID? What is the precise definition of an unregistered person? Thank you.
Okay, thank you, Mr. Moses Ogundele. Dr. Angela, I have a couple of questions sent to me privately as well, so I would like for you to add that to your list. Number one, the first question, why is the FIRS charging huge penalty for people who have registered their company as far back as 2015 to get TIN and to register on Tax Pro Max? Is it not contrary to having more people in the tax net? Why is the FIRS charging penalty on companies that have registered a long time ago who are now trying to get their TIN and register on Tax Pro Max? Does that not contradict having more people in the tax net? And the second question, is there any concern? Because lately you have quite a number of people asking, do we have to rush and upgrade our business registration to limited liability companies? So any company who has registered as enterprise, do they need to rush and upgrade to limited liability company? What will be the implication? Thank you so much, man. Dr. Angela, are you still with us? So it seems we have lost Dr. Angela once again. Technical secretary, are you going to give us questions?
So a few minutes, please.
Okay. Okay, ladies and gentlemen, the link to download the material has been updated. So kindly click on the link and download the slides. You can go over the slides as you please. Also, within the next 48 hours, the video recording of this session will be uploaded on our YouTube page. Kindly do us a favor and click on the links that will be shared in the chat box now and follow us across all our social media pages. When these links are shared, it's across all our pages. So the link to our Instagram, Facebook, and YouTube page is there. So kindly do us a favor, subscribe to the YouTube, follow and like our Facebook and Instagram pages for more updates. In continuation of our technical sessions, like I said earlier, okay, Dr. Angela is back here with us. Dr. Angela, please kindly do justice to the questions. Okay, while we're waiting for Dr. Angela, this will be the last technical session for the year 2025. We are hoping that come 2026, the last weekend of 2026, we are open to start the year with a blockbuster. We are looking at something related to a strategy session that will be led by strategy experts to kick off the year on a grand note. So kindly watch out. The flyers for that event will be shared across all our social media channels. Do us a favor, the link to our social media channels and the YouTube page has been pinned to the chat section. Kindly follow, like, and subscribe. Mr. Musa.
Yes, sir. Sorry to add one more question. Let me use the opportunity since our facilitator is trying to get back on board. My second question.
Mrs. Ogundele, your hand is still up.
Yes. Can you hear me?
Yes, please go ahead.
Okay. My second question, sir, is that in the Nigerian Tax Act, agricultural businesses are exempted from tax within the first 5 years of their operation. What of agricultural businesses there are less than 5 years before the commencement of this act, that is before 1st January 2026, will they also enjoy such exemption? Thank you.
Hello.
I hope someone got that question because I did not get it. The network came off for a minute. Dr. Angela is still having technical network issues, so please kindly give us some minutes to rejoin us. Some people are asking with respect to the links that has been shared in the chat section. Are you referring to the link for the presentation slides or the link?
Oh, sorry, I'm back. Oh, can you hear me?
Yeah, welcome back, Ma. Thank you very much.
About this, yes. Okay.
Okay, so you can address the questions now, Ma.
Okay. So the first question is on VAT. It was making reference to the VAT. So on that, what when you're talking of the exemption, you just have to look at the list of items on the zero rated, in the schedule to the act. I think part 4 of the act, you look at the exempt items and the zero rated items. Once you see that the item in question that relates to your organization is listed there in the act, in the zero rated items, whatever cost you have incurred with respect to that goods or services you can actually claim the input VAT on that. So for you to claim the input VAT, all you need to do is to make sure that you properly document, you keep a proper records, because if you want to claim an input VAT, you have your documentations properly kept, such that you can substantiate why the authority should refund you. You're asking for money because you don't have outputs to claim your inputs from. So definitely you will be asking for a refund. So you will be needing your cash back. So even if they have to do any form of audit, they will come and audit and see that you have your documents, you have everything intact. So that is it for the input VAT. As long as your item of production, what you're producing or the services you're rendering is specifically listed in section 187 as zero rated, you have the right, the legal backing to claim an input VAT on that. So for Mr. Sanders, Mr. Shedrack also asked question on gift. When you are receiving gift in form of cash, if it is taxable. So when you're receiving gift, maybe you're a pastor and you're receiving gifts, all you need to do also is to make sure that tell whomever that is giving you, okay, you are receiving cash as a gift. Cash as a gift. If you're a pastor and you have received cash as a gift, it's just the onus is on you to also, it's a cash that you have received, as in you collected cash as a gift. You do well, and then if you are disclosing it, you still tell the authority that it's cash now. I don't know what else I'll tell you on that. It's cash. But if the person is transferring to you as a gift, the only thing I will recommend to you is to advise whomever is giving you gifts, maybe for pastors, to properly do their narration properly, such that it will be able to show that it's a gift that you are receiving. So it's not taxable. The only thing you owe the authority is to disclose that I have received gift, and it can be seen that this is a gift and it is coming from so and so person. Do you understand? Perhaps you are a pastor, is not a taxable income per se. Okay, so for the next question is on Mr. Sonny, you were asking what if you're patronizing roadside mechanic. If you look at that particular portion of the law, I think it says it's talking about when you're awarding contracts to someone who is not registered. I think that's what that place is saying. If you're awarding contracts to someone who is not registered, then you will be penalized. So what you're doing with the roadside mechanic, you're not awarding contract to him now. You're not awarding, but that doesn't mean that the roadside mechanic shouldn't also have his own tax ID, because the intention of the law now is for everybody to actually have that tax ID. But what the law provides there is, say, if you're awarding contract, and when you're awarding a contract, which means there's an agreement, there is there's an arrangement in question. So you cannot make such an arrangement with an unregistered person. That's what the law is saying. Okay, so I think I've addressed that. Then the next question is the person that asked whether tax ID, he's asking who will be issuing the tax ID now, whether states, the JRB, or the NRS. So I will, my view on that, my opinion on that is that the Revenue Service is still going to issue guidelines, circulars that will guide us with respect to this registration and so many other things, to make those areas that are not too clear as to what the taxable person should expect now, clarity will be put, to all these things. They will issue out guidelines and circulars that will give us a kind of a direction on how to go about those areas. So that's my view on that. So the next question is, you are also asking you standing as an agent of collection. What is government doing to the agents for fulfilling the duty, the agency duty of collection of the deduction of tax? The truth remains that all these are mechanisms put in place just to also make sure that the tax system is simple and convenience, and the cost of collection is not too much for either the government or the taxable person. So if, apart from this, there are other measures, other services that the government will also render to the taxpayers that will make the collection of taxes convenient for them, whereby the tax authority will also incur cost on their own part. Likewise, you as a taxable person, those areas where you have to stand as an agent for collecting the taxes for the purpose of making the collection easier for you and for the government, I think you should be able to give cooperation with respect to that. But it's still, nothing still stops the government from taking that into consideration. Maybe if you find yourself in a place where they are having stakeholders meeting, a stakeholders engagement, you can bring this up. They will take note of that and see if they can consider to give you any bonus. But I'm also of the view that is a give and take thing. The government provides a very suitable platform for you to do your tax payment, your registration, your filing, and they are incurring costs just to make it convenient for the taxpayer. Likewise, there are other mechanisms, and which withholding tax is a mechanism for collecting income tax that would ensure simplicity and reduction of cost of compliance on both the government and the taxable person. So we are encouraged to also give cooperation for such mechanisms. Can you hear me, please?
Yes, we can hear you, ma'am.
Can you hear? Okay, so the next question, someone asked for withholding tax 2024 regulation, whether we are going to still apply that, since it's also made mention, it made references to CIT, to PIT, and so on that. Just a second. So on that, for withholding tax regulation, nothing stops. Let me go to, I want to see if I can see that section 51, so that we read out. So on that, I think my view on that is that law, the law we have just consolidated. If you look at in the actual sense, there is no two different from what you used to, apart from the new things that were introduced to ensure simplicity, to ensure convenience, to ensure harmonization. If you look at the CETA, the PITA, what the law has done is to harmonize, to consolidate the provisions. So in the actual sense, the regulation is still valid. If they want to continue with the regulation, is still valid in the sense that what it has done is to look at those income that should be that we should deduct withholding taxes from, and the rates, to harmonize the rates, to give us a better rate, reducing the rates on income on individuals or on corporate entities. So that is basically what that regulation has done, and to also ensure that certain complication that we've been having in our withholding tax regulation, such as defining an ordinary cost of doing business and so many other complications, to remove those complications. But nothing stops the authority, the revenue authority, from updating the regulation. You know, tax is a dynamic thing. It changes, it keeps improving to reflect the economic reality. So nothing stops them from updating it if they find it, you know, relevant, that there's need for them to update it from next year. But be it as it may, the regulation is still valid, even if we still apply it next year. Okay. So then the next question is small companies. It says small companies not expected to charge VAT, while large companies go on. Okay, will large companies go on to self-account for the VAT? Okay, so still on that, that is what it should be. As long as the small company, in the actual sense, is not transacting on any goods or services that are specifically exempted from VAT. What the law has done is to relieve the small businesses from the obligation from the stress of saying they are doing this, they are doing that, they are doing that. If their item of goods and services that they are trading on is not specifically exempted, they are not actually in the actual sense. What the small business is exempted from is from filing, from registering, from stressing himself, from doing that. So when a large company is dealing with them, you are the one to invoice them. If you are dealing with them, you are invoicing them. So at that point, you need to, you will not pay them with that VAT. That's it. You will just self-account it. So it's not really a serious thing that will pose so much problem on the large company. Because if the large company is the one transacting with them and they are supposed to pay them, what they are supposed to do is that they will pay them without that VAT, and they will remit the VAT to the revenue. So in the case of you asked also for some small company. How do you put?
For the umpteenth time, ladies and gentlemen, we want to apologize for that break in transmission. I think we have lost Dr. Angela once again. It tells to the pathetic state of the internet infrastructure, especially when you travel to the countryside. We are hoping that with the advent of these tax reforms, government will prioritize things like this, such that when a professional travels home for end of the year festivities, for vacation, or what have you, this kind of embarrassment will not rear its ugly head. So while we're waiting for Madam Angela to reconnect and answer the remaining questions, I want to appeal to us once again. The accessible links to our social media pages, my attention was called to it earlier on that the links we shared were not directly accessible. You could not even copy them. So you have to memorize and type in your browser. None of that is going to happen again. So kindly go to the Q&A section. Toggle your phone, click on the three dots you can see, and go to the Q&A section. From that place, you can easily click on the links and go straight to those pages and where we have the downloadable materials link. Mr. Shosibo, are you in touch with Dr. Angela?
Yes, in a minute.
Okay. Okay, ladies and gentlemen, please, we'll soon round up in the next 15 minutes. I'm sure we'll bring an end to this session. I can still see some hands up. I want to hope we are not adding more questions to the list that we have. Mr. Joseph Agbo. Mr. Joseph Agbo. Your hands are up. So also Mr. Ibrahim Shitu. Your hands are up. What do you have for us, please? Okay, Mr. Joseph, your hands are still up. If that's a mistake, we could just lower them for you.
No, that's not a mistake. Good evening, everyone. I don't know if I can see add to the.
Mr. Joseph, just hold on. Once we reconnect to the resource person, we'll see if we can squeeze in your question.
Okay, that's fine. Thank you.
Thank you.
Okay.
Mr. Manager, good evening, sir. We can hear you.
Okay.
You cannot travel home in peace. The whole world must know that you are traveling home because your network is very, very bad. That's not good enough. It is not good enough. Okay, let's keep ourselves busy. Maybe for the next 5 minutes. While we're waiting for Dr. Angela, I just want one or two persons to just tell us the highlights, the key things they have taken away from this session, so that it's not be as if we are just bringing on board resource persons. The participants are not really gaining actionable insights from the session. So I want two volunteers. What have we taken away really from this session? I'll go randomly through the room. Anyone that is bold enough to speak can do just that. Mr. Manager, so far, what has been your takeaway from this session?
It's been a great and highly educative and practical session, either as an individual or as a compliance side of service. I think Madam has done justice to the two sides, both for the person who needs to pay tax and the man in the middle who may want to represent such people to interface with the upcoming NRS. I think at least we are all better than we came by way of knowledge, understanding, and to some extent capacity. Thank you very much to Lagelu, our district, for organizing such. Thank you.
Thank you, Mr. Manager. Okay, Mr. Ibrahim Shitu, what has been your takeaway so far? Mr. Ibrahim Shitu.
Good afternoon.
Yes, good afternoon, good evening.
Yeah, good afternoon. I've been enjoying the session. The webinar is very good, communicative, and
Sorry, my people, I'm
very
back again.
interactive. I understand what Madam is speaking to
Hello,
us
everyone.
based
Please, I'm
on
sorry. I'm
the
sorry.
task that we are going to.
Mr. Ibrahim,
that we are
Mr.
going to
Ibrahim,
call.
I'll come back to you. Mr. Shitu, I'll come back to you. Dr. Angela is back again.
Please, I'm so
Okay,
sorry.
okay.
I
Thank
didn't
you,
even
sir.
know. I didn't even know I'm already offline, and I was talking to myself. I've already answered all the questions before I realized that I'm not with you people. I'm so sorry. So where did I lost you people? I mean, where did you lost me, please?
You were talking about small company.
Small company. Okay. How the
Yes.
large companies are to protect themselves. Is that where I stopped?
Something like that, yes.
Okay, so I was saying that the small company, the law has exempted them up to that threshold. So when you don't have income tax to pay, withholding tax is a mechanism of collecting income tax. So there shouldn't be withholding tax in the actual sense. So what the law has done is to make it simplified so that there won't even be arguments. So the large company is actually protected. If you do not charge small business withholding tax, you are protected by the law. The law has already exempted them from paying tax. So there shouldn't be withholding tax on them. However, you can also, just to protect yourself, you can request from the small business to give you a letter to show, give me something to show that you are a small business, write me officially. And they write you so that when the authority comes, you can also present it. This company that I dealt with is actually a small business. They wrote me. If they want to do further investigation or further inquiry or review, they can do it on that business. I hope that is clear on that. So that's my opinion on that. For the cooperative, the next question is cooperative society. Somebody was asking whether a cooperative society that engage in commercial business, whether they are going to use CIT or PIT to tax them as a basis for taxing them. And I am saying, if you have dealt with the Federal Land Revenue Service recently, and you are a cooperative society, you will agree with me that you cannot register on tax formats if you don't have affiliation with CAC, which means you must register with CAC. And if such cooperative goes to CAC to register, they will register as limited by guarantee.
Okay.
So they are not really business name. They are not really registered as business name. So if you have registered as business name, that's when PIT will come into play. But if you have not, that's very, and talking of the NTA that we are using now, yeah, we will be using from next year. If you're talking of if you're a business name, that's when individual, as in rate of tax for individual, will apply to you. If it is not a business name, then it means that the rate of tax will either be 0%. If they are a one person, it's not specifically defined in the interpretations to the act, that we are going to look forward to the guidelines and circulars that will be issued by the Revenue Service or future amendment to this law that can bring a specific definition to this. Because taxation is a dynamic thing, it changes, there's review. So as we continue to observe gray areas, specific issues that we're asking questions about, I believe that the committee and the as far as
The line was breaking, ma. It had been breaking for the past 60 seconds.
So can you hear me, please?
Not clearly, ma.
Okay, but can you hear me now?
Yes, we can hear you.
Can you hear me now?
We can hear you now.
Okay, so I'm saying that for those companies that registered 2015, that are just coming up to register on tax formats, it means that they've not been doing a lot of their obligations on the tax formats, like filing and so many other things. So if you are just coming up to do those kind of activity on tax formats, definitely they will apply a penalty. So that's why we are encouraging everybody to read the law. This new law, we all have to take it upon ourselves to read it, to understand, and be able to know where it's where we need to like understand where it will apply to us, so that we don't fall short of the law and we don't fall victim of penalties. Thank you so much. I think I've addressed all the questions. Okay, the last but not the least, somebody asked if they can rush and go and upgrade to limited liability. And my view on this is that I am not in the position to give you that suggestion, whether you should go and upgrade to limited liability. My position here is to present to you tax education, just as I mentioned in the first slide, second slide, my disclaimer slide. So if you need special advice, consult your tax consultant. But based on what we have done today, we have exposed to you the concessions you have that you can take advantage of. Thank you so much for this opportunity.
Dr. Angela, once again, thank you for creating the time to enlighten us, to give us your insight on the new, on the Nigerian Tax Administration Act. We remain ever grateful to you. And on behalf of everyone on this call, I want to say a big thank you to you. Shortly, we'll bring forward one of the executives of our district for the vote of thanks. But before then, ma, it's good that you are an insider at the Federal Inland Revenue Service. Please, ma, maybe when you return from the Dirty December activities, kindly make a plea for the dividend of democracy to flow to your village, so that the internet infrastructure can be upgraded to avoid this kind of disconnections every now and then. Because due to the bad internet connection, the whole world now knows that you have traveled to your village. Do you get? So please kindly make a plea so that we can have a stable connection in your village, man.
Thank you so much. Noted.
You're welcome, man. Once again, we appreciate you. I am aware that the pioneer chairman of our district is available on this platform now. Ladies and gentlemen, join me as we welcome Chief Mrs. Omokemi Olufunke Oladipo for our remarks, and also to appreciate our resource person and every other person who has made it here this evening. Madam Chairman, over to you, ma'am. You're welcome.
Wow. Thank you so much, Mr. Temitayo. In fact, let me first apologize for joining the call so late. I was being engaged in another program, which of course had to coincide with this one. So I really apologize for that. I want to say good evening to everyone. Good evening to everyone on this call. Thank you for joining. Thank you for believing in Lagelu and District Society. I want to especially appreciate Madam Angela. I'm sure it has been a very wonderful session. Thank you very much for coming on board. Of course, we know that it is always tax now till next year, January, when we actually involve ourselves fully into the real thing. And of course, you must have taken us through every areas that we really need to expect. Thank you, madam. We hope to have you some other time too. I want to appreciate the technical people the committee in charge of this technical session. God bless you all. The wonderful work you are doing for Lagelu and district is will not go unnoticed. Thank you very much. And I want to appreciate every member that found it worthy to join the call today. I hope you really enjoyed the session. Thanks for coming on board. God bless you, everyone.